Want to welcome everybody to our webinar today. This is Off Market Insiders. My name is Scott Lundgren. I will be your presenter. Today we're going to talk about how you can execute legal insider trading. What we're talking about is creating wealth like the top 1%. Okay, so we're not talking about doing something illegal or immoral. We're talking about investing into off-market assets through just a coined phrase that we say down here is legal insider trading. The top 1%, they do something different than everybody else. We just might as well admit that the vast majority of individuals have followed a path that has just kind of been laid out for them. And that's a big reason or a big problem of why people are not happy financially today. So what is different? What is different about the top 1%? How do they create income different than the average individual? And more importantly, what can you do today to be more like the 1%? Right? There's changes that you can make, and you don't have to wait. You don't have to, this isn't a pipe dream. This isn't down the road. This isn't eventually. These are things that you can do now, today, that you can change in your life to create wealth just like the ultra wealthy. And if you can start to make those changes now, you will get to the type of place that you've been wanting to much quicker, much faster, much easier. About 76% of Americans admit that money is the most significant source of stress in their lives. Taking that even deeper, 95% of people are either dead, dependent, or working at 65. They can't retire. Only 1% consider themselves to be independently wealthy, and 4% label themselves as comfortable. So even if we combine that 1 and 4, we still have 95% of people out there who just can't cut it on their own. They've either got to keep working or they got to rely on somebody else. And that's sad. That also includes Social Security. And what I read recently is Social Security is going to be out of money by 2035. So it's even going to get more dire for people that are planning on Social Security to be part of the retirement program. So what do? We have to start thinking and acting differently now, today, so that when retirement does come around, you're not in the same spot that 90 to 95% of people are in. Well, what do 90 to 95% of people do? We're going to talk about that. We're going to talk about the difference of what the 1% does so that you can start implementing and making some of these changes in your life. Off-Market Insiders is a group of investors that we have gotten together. We have a collective experience of over 50 years. We've been doing this for a long time. We've developed some amazing relationships out there in the marketplace to be able to allow individuals to fast-track their success. But these relationships didn't come easy. We have spent millions of dollars. We've spent hundreds and hundreds of man-hours to get to the point that we're at today, where we have now developed a system and a process where you can just plug yourself in. I'm going to explain that more as we go through this today, but if you want to avoid spending hundreds and hundreds of man hours and millions of dollars developing what has already been done, you can just skip to the front of the line. That's what we're allowing you to do here, and that's why we call this our Insiders program, our off-market insiders. We're going to get you insider information that would take you just about, collectively, probably hundreds and hundreds of hours to recreate, not to mention the money. So we have found that success is not mystical. It's not magical. Okay, success is simply predicated upon correct principles and strategies, and when you know them and you can apply them effectively, you can create success just like anybody else. I almost want to pause for a moment and let everybody reread that. In fact, I'm going to give everybody just a quick second here to read this statement again. I hope everybody on this webinar right now believes that this is a true statement. Okay. I hope that you believe that once you have a proper plan and you know how to affect it, you will create wealth. Okay. It's not mystical, everybody. It's not a crazy scenario that just somebody gets lucky to become part of the 1%. It's based on proven methods. And once you learn them, you will become successful quicker and faster. Our goal today is to help you become an insider, okay, an off-market insider where we can help you create wealth outside of the stock market. We're going to talk a lot about why the stock market is hindering most people here today and how you can create consistent positive returns using safe, secure assets that are out there that can get you better returns than the market and be safer. What do we mean by off market? Well, investments that you can't just easily find. What most people do today when they're thinking about putting some money away for long term is they just talk to their employer and their HR department and they say, what do you got? Right? Yeah, we've got our 401k, we've got an IRA, we've got options where you can invest and put some money aside. And that's what the vast majority of Americans do is they simply open up their accounts with their employer, they start funding it, and they leave it and they forget about it for 10, 20, 30 years and they hope it's enough. You're not going to find the type of investments that we're going to provide to you as part of this program just simply by walking down to your employer and asking them for something outside of the stock market. By the way, all those options, IRA, 401k, I could run through the list, they're all stock market based. Right? So we want to number one explain and help people understand today why that is really the root of the problem. Okay? But what other options do you have? You don't. If you walk down to your employer and say, hey, I'd rather invest into a different type of an asset, they don't have anything for you. It's not an option. Right? You've got to do that on your own, and that's why you need to become an insider so that we can provide those types of options for you. We vetted out wealth creation processes and opportunities so you don't have to go out there again and reinvent the wheel. We have collective opportunities I'll talk about here as we go through this process today that you can gain and become a part of that you just normally couldn't do on your own just due to lack of capital. Your 401k is not really doing what it was designed for. Ted Benya, who's really considered to be the father of the 401k, now says that he helped open the door for Wall Street to make even more money than they were already making. And when he says Wall Street, I want everybody listening here today to understand it does not mean you. He's talking about the institutional investors that control the Wall Street game. Okay, so his original creation of the 401k, the whole reason that he started it is he felt like at the time that money was being massively abused. The retirement and pension programs were massively being misunderstood and misused to the point where the average American was really getting the short end of the stick. Right? So he created these programs thinking, hey, I'm gonna put more control and more restrictions on everything so that the average American is more protected. And what actually ended up happening is institutional investors realized, man, this is the easiest, quickest, fastest way for us to get our hands in everybody's pockets. We just go through their employer. Right? Rather than sitting back and waiting for you to call Wall Street or call your stockbroker and start putting money in. Hey, if we just go to the employer and we just kind of help people realize, hey, just put $200, $300, $400 a month in here and we'll take care of it for you, right? Everything will be dandy. You're doing the same thing. They just have easy access to you. Okay, so the 401k, the IRAs, the things that are out there today, they are not doing what they were originally intended to do, which is allow the average person more control financially. Through legal insider trading, we're going to give you guys a huge leg up. And what we mean by legal insider trading is we don't mean go be Martha Stewart. Okay? In the stock market world, insider trading is illegal. Right? And there's reasons behind it, and I think some are justified, some are not, but the point being is it's illegal. Right? So if you have access to amazing information that cannot be used because of those rules, you can't profit from it. And that's sad. In the rest of the world, especially the type of opportunities that we're going to help you get into, we're going to encourage you to get all the information possible. In fact, we will provide to you most of the information that you need so that you can make an educated decision on the spot with all the information, with as much information as you possibly can get, rather than saying, nope, you can't use some of that great information that you just got. Okay? This allows you to continue to stay ahead of the game. Do you think the top 1% have access to information that everybody else doesn't have? Do you think the top 1% do things a little bit differently? We need to help you start to get and become like them. So let's cover some common questions that come up as we talk to our clients. Number one, will buy and hold in the stock market create wealth? And this is a valid question because, again, the 401ks, the IRAs, the programs that are out there, that's really what they're telling you to do is just pour it in and park it and hope that you get out at the right time. Right? Why can't you use insider information? What's the real reason behind that? Why do institutional investors not want you to be able to take advantage of information? This is an important thing to understand, why the market is against you, why it's going to be impossible for you to create true wealth just through the market alone. What do they do differently with their time, right? The wealthy leverage themselves, and they don't just leverage money. We have all heard of leveraging money. This is a phrase that most people have heard of in today's society, but what about leveraging time, or leveraging knowledge, or leveraging other parts of your world, your assets? You have got to learn how to leverage everything. Leverage is one of the key principles to financial independence. The wealthy understand this. Okay? What financial vehicles do you need in place in order to continue to move forward? How can I gain access to the same information, the same vehicles, the same everything else that we're talking about here today as the 1%? The only way is you got to be able to, join something like the off-market insiders. You have to be part of a group of individuals that can provide you the information, because on your own, by yourself, you'll never ever be able to replicate what a group or an institution will be able to do. So this slide here is to show you the gaps from a drop in the market to when it recovers. These three gaps have occurred over the last 100 years. The Great Depression started in 1929. It took till 1959 to recover. Same thing happened in the 1960s. It took till the late 1990s to recover. Happened again in 2000. It took 14 years to recover. So the point being, if you are heavily invested into the stock market and it's not at an ideal time to retire, what are you going to do? Okay, so let's look at the next slide. Let's just say it's 2009, right? When you look at this particular slide, in 2009, there was a huge dip in the market. We all know the crash of 2008, right? Well, do you really want to retire on a third or a half of what you had a year ago? No, you want to wait. You want to wait for it to recover. So in this scenario, you got to wait a decade. Well, if you're in your 60s in 2009, do you really want to wait till your 70s in 2019 before you retire? I mean, do you want to continue to wait 10, 12, 15, 30 years to recover? This is a constant, repetitious thing that happens in the market. It happens over and over and over. We've been on a bull run that is one of the longest bull runs we've seen in the last 100 years, which is great, right? If you have money in the market, you've been experiencing this ride over the last 10 years, and you're thinking, man, I'm getting 3, 4, 5, 6, 7% on my money consistently. I mean, that's great. I mean, but how long is that going to last, right? If we've been on the longest bull run in the last 3 generations, right? Well, how long is it going to last? Right? So if you're heavily invested in the market, if you have a lot of your financial wealth tied up into the market, I hope you're paying attention to this. I hope you're paying attention to the fact that you have a large amount of risk out there in the market today, and there's nothing you can do about it. In 2008, when the crash happened, the Oracle of Omaha, Berkshire Hathaway, Warren Buffett, right, one of the most intelligent minds that we have financially today, he lost 38% in Berkshire Hathaway, right? So if he's not immune to it, most people are not, right? Including, you have to ask yourself if you think you can do better than the Berkshire Hathaways, the Warren Buffetts of the world. In fact, Warren Buffett has a video I want to play here. He was on CNBC. They were talking about some other things, but they had a side question where they talked about asset-based, results. What does he feel like about assets, and what does he think is the right thing for the average American? And here's what he said.
Listening to you talk, though, Warren, when you say, with your comments about bonds, that makes me think of financial assets in general, which includes stocks. And I think about the printing presses, not only in this country, but around the world. You've seen the commercial cha-chung, cha-chung, cha-chung with the central banks. And there are periods where financial assets are great, from the early 80s to 2000. And I just wonder if there's then periods where hard assets are great. And you see Paulson in gold and some of these other guys in gold or commodities. Are you just not comfortable with commodities? Are there times where you should be downplaying maybe stocks or businesses and going totally full bore into commodities, but you're just not comfortable doing that?
No, the alternative with me, Joe, the alternative, I don't like fixed dollar investments at all. I don't like short-term bonds. I don't like long-term bonds. We own a lot of short-term bonds, but that is not because we like them. That's just a parking place. But the alternative, in my view, I mean, certainly commodities can be an alternative, but the alternative is income-producing assets of one sort or another that are not fixed dollar type investments. And so I've said consistently for the last few years, I would vastly prefer to own common stocks than fixed dollar investments over a 5 or 10 year period. I don't know about the next 5 hours or 5 days. And that might very well extend to rental real estate. It might extend to farms. I mean, an investment, you're looking for something where you put out money now and that asset that you buy gives you back more money over time. Now, the problem with commodities is that you're betting on what somebody else will pay for them in 6 months. The commodity itself isn't going to do anything for you. So there's two types of assets to buy. One is where the asset itself delivers a return to you, such as rental property, stocks, a farm. And then there's assets that you buy where you hope somebody else pays you more later on, but the asset itself doesn't produce anything. And those are two different games. I regard the second game as speculation. Now, there's nothing immoral or illegal or fattening about speculation, but it is an entirely different game to buy a lump of something and hope that somebody else pays you more for that lump 2 years from now than it is to buy something that you expect to produce income for you over time. I bought a farm 30 years ago, not far from here. I've never had a quote on it since. What I do is I look at what it produces every year, and it produces a very satisfactory amount relative to what I paid for it.
He mentions a few things in this video that are vital to understand as we go through this today. One thing he talks about is that he prefers income-producing assets like rental real estate. He mentions the farm that he had purchased. Income-producing asset based off of real estate is something that not just Warren Buffett believes in, but the vast majority of the 1%, the wealthy that we talk about, that we want to emulate. This is what they're putting their investment dollars into, as well as you should, right? When, again, we're trying to emulate what they are and what they're doing, we might as well just look at it black and white and just do it. Again, success is not mystical or magical, right? So he mentions there's two assets to buy. There's the ones that you hope, that lump sum that might pay you more down the road, or the ones that just profit you every single month or every single year based on the business model or the return on investment that particular investment will yield back to you. A farm, a rental property, a commercial real estate. I mean, we could go through over and over and over, but real estate is one of the most safe, secure type of assets that you can put your money into, and it continually gives you a constant income if you do it right. So how does this play out in the long run? Let's talk about two wealthy families, one wealthy family that did it the right way and one wealthy family that did not do it the right way, and let's see what the difference really means, because these are historical examples, but these are real. These are actual families, real stories. You can go research these on your own and find out that this is true, and it isn't just true for these two families. It's true for all Americans or all people that have the opportunity to invest where they want when they want. Cornelius Vanderbilt made his money through railroads. He had over $100 million when he died, which today translates into over $200 billion. So this is a massive amount of money. He donated a little bit to a university they took his name on, but the rest of this money went to his heirs. 92 years later, their heirs got together, and without any rules, restrictions, or any guidelines at all on the money, he just simply, left his money, his inheritance to his heirs. They got together and they realized that none of them had the millionaire status. Within 3 generations, that money is gone. The opposite side of that story is the Rothschilds. Built his money via banking, died When he died, he had a lot of money, again, about 300 billion based on today's money. But when he died, he left some simple rules in place which changed the way that his heirs utilized the funds. Number one, the money went into a family bank, or what we would call an investment vehicle. Okay, and I want you to pay attention to that term because we're going to use investment vehicle many times throughout the rest of this today. The family could not pull principal out. They could only loan against the money and then turn around and take that money and do what they want with that money. But as we all know, a loan means you're paying it back. So the mentality that his future generations had was, what can I invest this money into? What kind of ROI can I get on this investment? And as long as I'm going to get more of a return off of my investment vehicle than what it costs me to borrow from the family bank, I'm creating a profit, right? And that's how they create their wealth. And they've done this over and over again. And for the last 100 years or so, they've been doing this, over 140 years, it looks like now. They get together every year and they review what works and what doesn't. So the family has got this, this feeling of what we can do to create wealth. And they have over $100 trillion today based on some estimates that are out there. Could be more or less. It's hard to put a number on it. But the point being is their family wealth is growing and it's continuing to grow. And it's continuing to get larger and larger and larger because they're just following success principles. That's it. They're not the smartest people in the world, right? They don't have, all this access that nobody else can get to, but they have the right mentality. They're doing it the right way. And as long as you implement those same types of strategies in your life, you will continue to create wealth just like they did. There's another thing that they do differently, and that's what they do with their time. We talked about leveraging earlier. Leveraging time, leveraging money, leveraging knowledge, all of these things are vital and important. So let's look at the difference between the type of income that they have and the type of income that most people have, which is active versus passive. Okay? Most people in America today create their income actively, meaning they work. Okay? Wages, tips, salaries, commission. Even if you own a business, but you have to be there on a daily or weekly basis for that business to continue to thrive and pay you, that's an active income, right? This is in the real estate world, which is part of the asset base that we're going to get you into. This would be like actively flipping a property or actively going out there and wholesaling, which is, again, a time conducive type of thing. There's only so much return you can get on your time, and I'll show you a slide here in just a second to help illustrate that. But as far as passive income is the exact opposite. It's income that is received usually on a very regular basis where there is no or very little additional effort after you initially invest. Royalties, interest earnings, portfolio returns, and in the real estate world, this is your passive income, your rental properties. Okay, so this slide, I'm a very visual guy, so when I talk about the difference between active and passive income, I really like this type of illustration because it makes it easy for most people to understand. Look at a 40-hour work week. If you work 40 hours and get paid 40 hours, you can see on this scale, you're getting paid about 25% of the time. 75% of the time, you're not creating any wealth, any income at all. I don't think I need to go much further than that for anybody here listening to understand, man, it's going to be pretty hard to get ahead if I'm only creating income 25% of the time, where the wealthy are creating income 168 hours a week. Right? Even if you're a workaholic, I put a 60-hour work week on here, but we can even throw it to an 80-hour work week, right? You're only making money half the time, not even that, right? And by the way, if you're working 80 hours, what does that mean? Right? You're working, you're sleeping, you're eating, and that's about it, right? I mean, you have no life. You're not enjoying. You're just working to work. And that's not the kind of lifestyle that we want to encourage or really that anybody should have. But until you see this and wrap your head around this, it's hard to understand. Why are the 1% be getting wealthier and wealthier while everybody else are struggling? It's how you're creating your income. It's how you're leveraging your money. It's how you're leveraging your time. You start changing these things, and you're going to create wealth just like they do. So I'm sure a lot of you are saying, Scott, I get it, right? I want to create wealth like the 1%, but what can I do today? What can I do right now in my life to make a change? And the first thing is we have to understand what we can do as a company. What can off-market insiders do to help you? And what are the specific financial instruments that you need to become wealthy? Okay, that's what we're going to expose you to. That's the reason we're on the webinar here today and why you did everything that you did to get to this point. So now is when you really need to shut off your cell phone, turn off the TV in the background, remove all distractions, because it is important that you understand these vehicles, and they're going to help you create wealth in these changing times. Let's start with one very simple financial vehicle that the wealthy have been using for over 160 years. Okay, most people on this webinar right now today have bought a car. And I think the vast majority of those people have used some sort of financing to purchase it. So this is a great example of what the average person does versus the wealthy. Okay, the average person will go out there and get a loan, and you can see here that loan is going to cost you money and you're going to pay it back. I used an example of getting a loan 3 times for a car that cost about $30,000. So we buy the car, we pay it back. We buy the car, we pay it back. And over the course of that time frame, we would have spent $110,000. And after we paid off our third vehicle, we have exactly $0 of wealth. We've not created any wealth of any kind. We've just bought some vehicles, cost us $110,000. Some people might come to me and say, Scott, I'm super disciplined, right? I only pay cash for my vehicles. All right, great. So let's use that example. You saved, you bought. You saved, you bought. You repeat this action, and when you bought your third vehicle, guess what? You still got nothing, right? You saved a little bit in interest, but yet you did not create wealth. The financially wealthy, the 1% of the world, are going to say, I'm going to put my money into an asset first. Okay, remember the Rothschilds. They're going to create a family bank, right? So we're going to teach you how to become your own investor, right? To, instead of go to the banks, go to yourself. Create an investment vehicle where you can then build wealth the entire time that you're buying your vehicles. And in that scenario, you're still going to have to get loans, but you're going to loan against your own assets and your own investment vehicle. And while you're buying your cars, you're going to create wealth in the meantime. Same person, same scenario as the individual who just bought a vehicle on their own without using any financial vehicle, and the next person who bought a car and did use the financial vehicle that we talked about. They would have $270,000 based on the numbers that we ran here. Okay, obviously everybody's a little different, may fluctuate a little bit, but the point being, they created wealth. Imagine if you could take the next 3 vehicles that you purchase and turn them into $250,000. What would that do for you? How would that change your life? Right? And by the way, if you're not purchasing your vehicles this way, you should also ask yourself, if this one strategy could make me more than $250,000 difference and I don't have to change anything about my day-to-day life. I didn't change my job. I didn't change my spending habits. I didn't change anything else. I just implemented this financial vehicle and created $250,000 of wealth. Do I have to stop there? Or do you think maybe instead of just buying my cars this way, I could buy my homes? I could use the money that I spend on vacations and put it through my financial vehicle. If you own a business, do you have in and out of your business? If you run that through there, you can create wealth off that money as well. And all of this money right now that is just not actually getting you what Warren Buffett said, which is an actual return on an annual basis or monthly basis, you really do need to get your money doing that first. Then go spend it on college funds or vacations or anything else that you might decide your money needs to go towards. But do it in the right method or the right order, and it can make not just $250,000 difference off of vehicles alone, but if we start looking at vehicles and all the other expenditures that happen, I mean, this could literally, for most people, mean the difference between no wealth in 30 years and millions of dollars in the bank in 30 years. Okay? Why do you think the 1% are getting ahead and the average person isn't? This is just one of many financial vehicles that we can turn you on to. Okay? Do you think you could take and use these types of vehicles in your life? You have to remember, in any business transaction, there are really 4 currencies that go into the transaction. There's money, there's time, there's knowledge, and then there's the relationships necessary to go make it all happen, right? And I would venture to tell anybody that's listening here today, we can bring the vast majority of this to the table for you. We can eliminate time. Okay, we can put together a scenario where you can put little or no time or very, very little amount of time on a monthly basis into your investment strategies that we're going to help you implement. Knowledge, we've already gone out there and acquired the knowledge. We're providing it to you in a very succinct strategy system. It's going to be laid out for you. You just have to follow it to a T, right? As long as you're willing to go through and follow what we've laid out for you, we've taken time and knowledge and relationships off the table. All you have to do is bring your capital to the table. Let us show you how to put it to work for you, and the rest is all figured out. All the heavy lifting has been done. As part of Off-Market Insiders, when you join and become a member, the first thing we're going to do is provide you a guide to passive real estate investing, because real estate is an asset that we're going to encourage you to get into. You got to understand the basics, and this will help you come up to speed immediately on some of the basics of passive real estate investing. But passive real estate extends to what we call done-for-you real estate, meaning we've already gone out there and we've already sourced single-family homes that can be rented out. We've already sourced apartment complexes or commercial real estate or storage unit facilities, and I could go on and on and on, but we have a lot of different investment opportunities that we've already done. We've already figured out. We know where to go and what to do to make these things work. Again, vetted out wealth creation processes, they're already in place. All you have to do is plug yourself in. Why done for you? Well, immediate returns on investment could potentially be 6 to 10% or more out of the gates. Okay, you don't have to be involved in the day-to-day. You don't have to fix up. You don't have to know the strategies of real estate, where to buy. You don't have to have potential tenants in mind or any of this kind of stuff. These are all things that are done for you as part of the strategy. For example, if somebody came to me and said, Scott, I love the idea of passive income, but I don't know where to start, right? I want to give you an example, in fact, about somebody who came to me from San Francisco. He called me up and he said, Scott, I love the concept. I want to get started. I've got some money, but my local market in San Francisco just isn't right for positive cash flow, for real estate. I said, great, I'll listen to you. Why do you say that? Why do you think San Francisco doesn't work? And he said it's simple. My median home price in my area is $1.2 to $1.5 million. Okay, that's pretty steep, right? In the Midwest, in our markets that we encourage people to invest into single-family homes with, our average median price is $120,000 to $150,000. So we're about 10 to 1 on our ratio. I can buy 10 homes for what he can buy one for in San Francisco. So I'm immediately agreeing with him in my mind. Yeah, that makes sense. I can see why you don't like it. But I wanted to walk it through. Let's look at the final number. Obviously what matters is what can I rent out that property for? What's my ROI? What's my return? Because they could be equal, even though that property costs a lot more money. So I run the numbers in the Midwest and I look it down. I say, okay, we're probably about $12,000, $13,000 a month in cash flow. What can you rent out your $1.2 to $1.5 million property in San Francisco? And he said, Scott, it's about $3,600 that I can get a month for this particular property that I want to get out of. So he's obviously correct, right? If I can create $12,000 to $13,000 a month with the same amount of money that he can create $3,600 a month, it's a no-brainer. I'd rather get my 3 or 4 times better returns in the Midwest, right? So for that type of individual, he didn't have to go through what you're looking at right now. He didn't have to identify what are the best markets in the U.S. He just knew that his market sucked, right? He didn't have to go through and once he found a good market, find the good neighborhoods. There's what do we consider to be A, B, C, D neighborhoods within any market, right? How do you know if it's a market halfway across the country, what neighborhoods are actually good without going there? Right? What about the actual homes in the neighborhood? Some homes in a neighborhood might not be a good cash flowing home compared to another home for reasons of purchase price versus rent, right? So do you really want to dive that deep into each neighborhood and then each homes within the neighborhood? By the way, once you find the best home in the best neighborhood in the best market, you got to rent it. So we got to get a good tenant, right? Do you know anything about getting a good tenant? And this is, again, the difference between active and passive. If we've already done all this for you, if we've selected markets, neighborhoods, homes, tenants, and property management teams. And we've already done all that, and that work's already complete. When you pick up the phone and you call and say, I'm ready to invest, we can immediately hit the ground running. If you're to have to do all that on your own, then you're an active investor. You haven't bought into the concept of passive income yet, because what that means is you're going to spend a whole lot of time and energy, hundreds of hours, to recreate what we've already done. Right? Why waste your time? What you should do is just call me up, and we'll use a very specific example of somebody who calls me up and says, Scott, I've got $100,000. What can I do? What kind of assets can you provide for me if I hand over $100,000 and invest? Right? Well, what the first thing is we're going to encourage is we're going to talk to you about leveraging your money. And I think most people listening to this webinar today probably already buy into the concept or understand the power of leveraging your dollars. But let's make it glaringly obvious. Okay, if I take $100,000 and I use it as a 20% down payment, I'm going to be able to purchase $500,000 of some sort of real estate. Okay, whether it be apartments, single-family homes, condominiums, storage units, it doesn't matter. It's not about the type of real estate. It's the fact that it is a real estate asset. And the first thing that's going to happen is we're going to expect some paper growth or some equity growth. And in this example, I used a 4% annual equity growth. By the way, some of our Midwestern markets over the last little while have been closer to 6 to 8%, but I'm still using 4% as an illustration. If we have a 4% annual equity growth, remember, we bought $500,000 of real estate. We spent $100,000, but we bought $5,000. 4% increase on 5 is $20,000 increase. But because we only put in $100,000 and we had a $20,000 increase, our first year ROI on this example is 20%. Now remember the stock market. I told you guys earlier that we've had the longest bull run over the last 10 years, right? As the last 2 or 3 generations have seen. And that, on average, Bloomberg said 3.71% was the average individual portfolio return. Market average is actually 7%. So if you're in that 3 to 7% range, like I'd say 95% of the people that I'm talking to right now have fall into, you've already completely surpassed the market returns. 20% potential ROI just off of equity growth alone. But remember, we're not going to stop on equity growth. We're going to continue, and we're going to rent this thing out. So we got $20,000 return on annual equity. We're going to rent these properties out, and we're going to have $12,000 of net cash flow that comes from these properties. Okay, our potential tax breaks, we haven't even got into taxes yet, everybody. We haven't even really dived into the subject. With stocks, with traditional 401k or IRA programs, you can't write off interest. Here in this scenario, we have a $400,000 loan. We got $22,000 of interest that we're writing off. Oh, wait, we're depreciating the properties as well. So we now have, $30,000, $40,000 of potential write-offs, which for most people, and I just used an average, typical American, average age, average income, average tax rate of around 30%. That means an additional $15,000 of tax breaks. You guys, your potential ROI on this is ridiculous compared to the market. But yet 95% of Americans at 65 can't retire, and they're scratching their heads and they're wondering why. Why can I not retire at 65? You think it has anything to do with the vehicle yielding them 3 to 7% instead of 20, 30, 40% like they could see? Right? Do you think there's a reason why the institutional investors are out there buying up real estate right and left? Right? They're getting the 30, 40% returns, and they're turning around and handing off 3, 4%, 5% returns to the average American. Okay? There's a reason why the gap is getting larger and larger in our country today, and you just have to ask yourself, what side of that line do you want to be on? The next thing that we're going to do when you join Off-Market Insiders is we're going to provide you access to our preferred partners. Again, remember, we have hundreds and hundreds of man hours. We have millions of dollars invested so far in creating these relationships. If you want to go do the same thing, if you want to spend hundreds of hours and millions of dollars, by all means, you'll get to the same spot we're at today if you want. Okay? Or you can just skip the line. Come right up to the front. Let us show you the partnerships that we've created. Doesn't matter if it's turnkey, commercial, syndications, crowdfunding, asset protection. I could go on and on and on about all the relationships that we've created in order to be a good investor in today's society. Okay, but there's certain strategies, there's certain things that you need to implement. Everybody needs to do it. It's pretty much the same for most people. Those relationships you can piggyback on. You can immediately utilize our partners from day one. Let's look at tax savings as an example of this. The average small business in America today, the number one cost is taxes, right? So if the average person is falling into a 30 to 35% bracket, right? What if we could just take every American right now today that has a small business, and we can immediately take them from 30 to 35% down to the low 20s or the high teens? What do you think that would do for the country? Right? That's the Reaganomics type of thinking, that trickle down. If we save money for the business owners, what's going to end up happening? They're going to turn around and they're going to invest, or they're going to spend that money, and that's going to help the economy. That's going to help everybody, right? So what if you had an extra 5 or 10 or 15% that you did not have to give to the government every year that right now you are? What would that do to your bottom line? What would that do to your investment opportunities, to your lifestyle, if you can have an extra 5 or 10 or 15% that you just don't have right now because you don't have the proper tax strategies in place, right? So I don't know exactly what your net effective tax rate is today. You know it better than most people. But you have to ask yourself, do you think it's the lowest possible? Even if all you could do is shave off a few points, is that worth it? Right? If it is, we can turn you on to some of our partners that we've already established, some of the leading CPA firms in the country right now today that are excellent at working with investors and lowering their net effective tax rate. If they can help you, even if it's just a few points, it's well worth it. If you can get 10 or 15 points, absolutely. It's going to make massive changes in your life. Once you create wealth, asset protection also becomes important, right? So when we look at assets that you may already have now today, or that you're going to be acquiring through making these changes in your life that we're going to help you implement, as you acquire more and more assets, it's going to become more and more important for you to look at estate plans and family trusts and having an LLC or corporation of some kind to help you with reducing tax rates and creating legal protection. Right now, today, I don't know where you're at and what you need. The point is, if you need something, if this is something that needs to be addressed as part of your wealth creation process, we have attorneys that we've already created relationships with that are excellent at this, that have systems and strategies in place that will allow you to grow and fluctuate over time because they understand how to protect assets the right way. Not every attorney understands this. Attorneys and CPAs and everybody else that we're going to introduce you to, they're just like any other profession that you get into. If I have a medical problem, let's just say, my heart is failing me, I don't go to my foot doctor, right? I need to go to the right doctor. I need to go to the heart doctor. I need to go to the right one. The right CPA, the right attorney, the right partnership that, again, we've already created is vital for you to continue to move forward effectively. Don't go reinvent the wheel. Don't go start from scratch. Become an insider and let us take care of these things. Let us create these relationships with you and for you so that you don't have to go out there and do them on your own. We provide investment opportunities all the time. We're going to highlight one of these investment opportunities every month. We're going to sit down. We're going to, just like this webinar here today, we're going to outline the opportunity top to bottom, right to left, show you all the numbers, help you understand everything that went involved in our hundreds of hours and millions of dollars that we've invested so far to get that particular asset in front of you. If you like the opportunity, you think, man, that's exactly what I've been looking for, you can join. You can become part of that particular opportunity. Or you can just simply store it in your memory banks as something that may work for you some other day or down the road. And the next month, we're going to continue to highlight more and more opportunities for you. We're going to provide a newsletter, which, similar to all other newsletters, is just updates, right? Updates on investment options or articles related to investing that we feel like might help you, research, things of that nature. Now, I mentioned the LLC just a minute ago when we talked about asset protection. If you become an off-market insider, we feel like it is so vital that you have a proper LLC created that we're actually going to include an attorney-created LLC with every membership. And when I say an attorney-created LLC, I don't mean a cheap online option. Anybody can hop on right now to a LegalZoom or their county website and they could file a piece of paper and have an LLC. And they could do it relatively cheap and inexpensively, but that's not a good LLC. That's not the kind of LLC that you need, because those things don't come with operating agreements and articles of incorporation and other LLC documents that you need in order to properly form the right kind of corporation that helps you accomplish the goals that you've set. When we have an attorney sit down with you and talk to you about your goals and what you're trying to do and what you're trying to accomplish, and he creates an LLC that has all the supporting documents necessary, now you have a foundation. And having a proper foundation, as we all know, is one of the keys to creating the success that you're looking for. So for everybody that joins Off-Market Insiders, we will provide to them one of these LLCs. We also provide an initial consultation. And I should say ongoing consultations is probably a better way of looking at this, because it's not just one time. But we do need to do one out of the gates. We need to sit down and talk about where are you at financially? What are your goals? What are you trying to accomplish? What needs to change in your life in order to get to that goal that you've set quicker, faster, and easier? Once we lay that out and we have that initial consultation done, we have a plan set, and you're happy with it, and we start affecting that plan, we got to remember, year by year, things change. You get married, you have kids, and job changes, and I could go through a million scenarios that, would change your situation or have a need to reevaluate your plan. But I want you to understand, we're willing to do that ongoing, year by year. As long as you're an off-market insider, you always have access to consultants like myself that can sit down and go over those things with you, so that you're not figuring these things out on your own, but you're following a proven method. We feel like the value of everything that we just talked about here today is roughly around $10,000. I actually would label it a lot higher than that myself, but we had to put a number to it. But we're going to offer all of this here today for a $2,000 price point. This is an annual enrollment of $2,000 that you'd be joining our off-market insiders, and really $2,000 is a drop in the bucket for what you're going to be able to get out of this. When you think about establishing these relationships, which cost us millions of dollars and hundreds of man hours, that alone is worth the money. The fact that we're going to provide ongoing investment opportunities that you can't find by walking down to your bank, that you can't find by going to your HR department at your work, that you can't find by jumping on Google and doing some searching, right? These are investment opportunities that you have to get some sort of insider access to be able to take advantage of. I've sold hundreds and hundreds of investment properties to clients of ours in the past, and not one of them were listed on the MLS. Not one of them you could have found through some local realtor or some other option. These are investment opportunities that you don't have access to if you haven't had the insider access like what we're going to provide to you. These opportunities are things that anybody can take advantage of today. You don't have to wait until you've saved a ton of money. I don't care if you have $5,000, $10,000, $100,000, $1 million, $10 million in the bank. It doesn't matter the amount of money that you have sitting down right now today ready for investing. You may not have any at all. You may say, Scott, I'm paycheck to paycheck right now. If that's the case, then there is a plan that we can put you on to put you in a position where we can create a little extra on the end of every month. And then when you have a little extra, we can show you where you can put that investment in order to get the ROI like the 1%. If we can get a proper return, it'll start compounding. And we all know the benefit of compounding. Right? If we can utilize these strategies, leveraging, compounding, following proven systems, if we put all of this in place for you today, you're going to have a massive change in your life in the next 5, 10, 15 years as you continue to affect that plan. And we're going to be able to help you put yourself in a position where you can retire quicker, faster, and easier than where you're at today. We look forward to the opportunity. If you want to join, all you have to do, it's real simple, is just click the little button that's below the video right now. It says Become an Insider Now. Click it, fill out the information. That'll automatically generate us to call and to schedule that first introductory session so that we can go through and we can start building that profile. For anybody that does take that opportunity today, I do look forward to that conversation here as soon as possible.